Well, hi everyone, Sean Humphreys here. Welcome to All Things Retirement. Well, in this installment, we're going to continue with our series of videos talking about the real tangible benefits of having a retirement income plan prepared that's customized and unique to your particular circumstances and goals. And we're going to talk about one benefit today that allows you to have your cake and eat it too, so to speak. We're always balancing off the need for cash flow today, but also saving money for the future. How do you find the right balance between those two priorities? So I think you'll enjoy this video. Now, if you're new to the channel, make sure you hit the subscribe button so you don't miss future content. As well, in the links with this video, you'll find our retirement planning resource bundle. You just click the link to that, and there's some great resources, videos, PDF documents that will help you plan for retirement. And there's another link that if you're thinking about getting a retirement income plan, that'll take you to our retirement income planning service. Okay, let's take a look at this benefit of a retirement income plan and how it allows us to have sort of our cake and to eat it too. That's always an ideal situation. So in my mind, this is one of the fundamental questions we need to answer in the context of a retirement planning. And as we talked about before, there's three phases, right? There's the accumulation phase. We're not retired. Maybe we're 5 years plus away from retirement. We're still accumulating pensions and assets before we've transitioned into retirement. And then we have the runway phase, which is basically we're just on the cusp of retiring. We're transitioning over the next 5, 3, 2 years. And then we have people who are retired, and there's ongoing planning that needs to be done there as well. But from a standpoint of asset accumulation, that's that first phase, here's a question we need to answer. How much of your cash flow that's coming into your family every year do you actually need to save? How much is enough? So although this is not common, I sometimes come across people who are probably saving too much. They're so paranoid about not having enough capital when they retire that they're going the extra mile consistently, but they're robbing themselves from experiences today, whether that's travel, doing things for their kids, their family, their community. And so the real power of a retirement income plan is to allow you to strike that balance. How much do you actually need to save to achieve your retirement goals? Once you've hit that number, then you can spend the rest on the other important priorities that you need to pursue to feel fulfilled and happy in your life. So in my mind, this second benefit is hugely important because we're always trying to find that balance between those two priorities. Saving for the future, spending for today on things that are important to us that might bring us happiness, satisfaction, make a difference in our world, whether it's for our communities or for our kids. So ultimately, your retirement income plan needs to help you balance the tension between the needs and wants that you have today and the needs and wants that you have in the future. Now, once you've been able to confirm that balancing act between today and tomorrow, then it also gives you some ideas about how to structure your saving strategy, that mix of RSP accounts and contributions, tax-free savings accounts, and non-registered accounts or open accounts. And sometimes for some of you, it could be your corporate investment account. Now, with RSP planning in the old days, before we had tax-free savings accounts, we said, just maximize your RSPs as best you can. You have a tax deduction, you're getting tax-deferred growth, and then down the road, you're going to pull money out, but you'll probably still be ahead of the game. Well, I think the planning around RSP contributions needs to be much more nuanced than that today. So in general, what I would say, for many people, making an RSP contribution can still make a lot of sense. For many people, they'll be at a marginal tax rate that will be higher through their working years than when they retire. And that's particularly true right now under current tax legislation if you've got a partner, because you can initiate some pretty significant income splitting opportunities that will reduce the overall marginal tax rate for the family. So if you can deduct at, let's say, 35-40% while you're working and then pull the money out of the RSP when you retire to 25%, there's a clear win. So you get the arbitrage or the difference between what you deduct at and what you pull the money out at, plus the tax deferred growth. There's a win there. But at the same time, many people are concerned that with the RSP accounts, they're growing this deferred tax liability. So on the one hand, I would recommend people use the RSP account where it makes sense as a cornerstone part of their retirement income plan. But again, just like with the previous slide, do enough, but don't do more than what you need. So at some point, clients may give up the tax deductions each year for an RSP contribution and begin putting money into a tax-free savings account. And the reason for that is they want to build up a pool of capital that is going to be accessible to them without any taxation when they pull the money out. They get the benefit of tax-free compounding while the money's in there. They can pull money out or put money back in under certain guidelines without losing their contribution room. So it's an ideal account to build up this extra capital that can be an opportunity fund. And then finally, once somebody's maximized their RSPs, TFSAs, they might be putting money in non-registered accounts. Now, what I find is that for many clients, they don't necessarily need to be doing all three. So like I said, RSP planning, do enough. But maybe don't do more than what you need. For an account with flexibility and you're building up an account that doesn't create tax issues for you down the road, then the tax-free savings account is ideal for that. Okay, so that's a second benefit of a retirement income plan. It helps you confirm how much do you need to save, but don't save more than what you need. Once you confirm that number, then you can balance off your saving strategies between RSP contributions, tax-free savings accounts as an example, and then you can find that sweet spot. You can have your cake and you can eat it too. Well, I hope you found the video helpful, and if you haven't subscribed, make sure you do that right now. And as well, like I said, we have links to our Retirement Income Planning Resource Bundle. Just click the link with this video. It'll take you to a page that gives you more information. There's some videos, PDF documents, worksheets. That'll be a great resource as you begin thinking about retirement. And if you're thinking that you may want to have a customized retirement income plan prepared, click the link and it'll take you to a page that gives you more information about that service. Anyway, wishing you all the best in your retirement planning journey. You take care.